Hello, everyone. Thank you for joining me today. In this presentation, I will be discussing the current state of Japan's real estate market. The title is Hidden Selection. While the headline numbers show growth, a significant structural change is happening beneath the surface. Let's dive in. First, let's look at the big picture. We are in a major transition phase. While top-line investment figures are rising, the market is facing harsh selection driven by cost-push inflation. Today, I will cover 4 key areas. The macro illusion regarding investment numbers, the major shift in the housing market, the polarization in the non-residential sector, and finally, the new norm for success in this environment. Let's start with the macro data. Please look at this chart. The dark blue bars represent nominal investment, which is projected to grow by 4.7% in 2025 and 5.7% in 2026. It looks like a boom, doesn't it? However, look at the red line. That is real investment, based on volume. It is almost flat. The gap between the bars and the line represents cost-push inflation. The growth is driven almost entirely by soaring material costs and labor shortages. The era of, if you build it, it will sell has ended. We must be very careful not to accept these growth numbers at face value. Now, let's look at the housing sector. We are seeing a significant drop in new housing starts, forecasted at -9.8% for FY 2025.
Why?
Because high property prices and looming interest rate hikes have made buying a first new home extremely difficult for the average person. Demand is softening for commoditized new builds that cannot justify their high price tags. However, the housing market isn't just shrinking, it's shifting. We are entering the era of rental and renovation. While ownership struggles, rental demand is strong due to the rise in single-person households. More importantly, look at the renovation market on the right. It is expected to grow by 8.6%. Capital is shifting from flow, new construction, to stock, maintenance. The market value is moving from newness to performance, such as energy efficiency. Next is the non-residential sector. The key trend here is reshoring. Investment in domestic factories is increasing, driven by the weak yen and the need for economic security. Japanese companies are bringing production back home. In contrast, logistics warehouses, which used to lead the market, are now slowing down due to fears of oversupply. In the office sector, we are seeing clear polarization. There is a clear divide between winners and losers. The winners are high-quality buildings in prime locations that offer GX, green transformation, and DX, digital transformation features. Tenants are willing to pay a premium for these. The losers are older, uncompetitive buildings. These assets face a high risk of rising vacancy rates. Briefly touching on the public sector, government investment is strong, forecasted to grow 7.8% by 2026. This is driven by national resilience policies against natural disasters. A crucial point is the 13.3% jump in repair spending. The opportunity here is not just in new infrastructure, but in updating and maintaining existing public assets. What does this mean for the macro context? We are adapting to a world with interest rates. Rising construction costs plus rising interest rates equal lower margins. The business model that relied on decades of near-zero interest rates is obsolete. Only projects with genuine high profitability and strategic value will survive financing checks. To summarize, the winning strategy for 2025 and 2026 is moving from volume to value. To succeed, players must focus on life cycle management, shifting focus to renovation and stock. Strategic targeting, focusing on niches like energy saving and resilience. Differentiation, leveraging DX and GX to avoid commoditization. Developing land simply for the sake of new construction is now an obsolete strategy. Thank you for watching. I hope this overview provided a clear perspective on the structural changes in Japan's real estate market. If you found this helpful, please hit the like button and subscribe for more insights. Thank you.